All right, folks, the broad market been trying to rally here without those big growth names right now. I've been pounding the table that during these periods of so-called rotation, don't get blinded by headlines or news that the market is down, because these value names simply do not carry the broad market, but they can make you a lot of money. Plus, I think it's critical for the overall rally to broaden out. You need more winners. And I'm going to bring in two of the best right now and discuss where they're investing. Fitzgerald Group Principal Keith Fitzgerald, along with Kingsview Wealth Management CIO, Fox Business Contributor Scott Martin. Scott, so the material names have been up, industrial names have been up. They're very tiny fractions of the S&P, the Dow, the NASDAQ. So the overall market's not going to be up. But, there are some big winners in there.
There are. I like your call, Charles, about the broadening of the rally base because, gosh, well, it feels good to have the FANGs going up every day as they kind of had been in May and June. The reality is you need a more expansive breadth of rallying stocks. And I think what you're talking about there is exactly the key to where this rally is going, which means it probably will spread and continue to spread, as we've talked about, Charles, to the mid caps and the small caps and the financials as well, which I've loved for some time now in the last few weeks. But it's so funny when you talk about the size of like the industrial companies and the S&P. Financials are very small now too. So as those rally, they don't bring the market up as much, but it's good to see them go up.
Yeah, I'm going to circle back and talk specifically banks with you because I know you like them, but I want to bring Keith in this as well. Keith, yesterday on Twitter, I posted a photo of the UPS store in my hometown. My wife took it. A gigantic line outside to get inside. I went there earlier in the week, the same sort of line. FedEx is surging today. It's the top 5 percentage gainers. So there's money to be made outside of the Facebooks of the world and the Googles of the world. But it doesn't reflect. I mean, the markets could be down, and you can still have big winners that don't get a lot of visibility.
Well, that's very true, Charles. And the situation strikes me a lot like the gold rush of 1848. You've got a lot of people going into the hills to look for gold. But the people who really made the money were the people selling the shovels. FedEx is one of those shovel companies. UPS is one of those shovel companies. The banks are shovel companies. I'd rather be selling shovels than looking for gold.
You gave me a segue to go down the path that I'm not going to go down when you start talking about shoveling things. Instead, let's switch gears. Let's switch gears to this monster month last month for retail sales, up 7.5%. Wall Street is looking for 5.2%, driven by auto sales. And of course, a lot of components, if you really look inside, benefiting from reopening. In fact, take a look at these winners, folks. Clothing up 105%. Restaurants and bars up 20%. Department stores up almost 20%. Cars up 8.2%. Part of that move to suburbia movement. Sporting goods up 27%. A lot of that, by the way, gun sales. On the losing side, building materials, grocery stores. We're not really, hunting down toilet paper like we were. And the internet, which is rare. So, Scott, I want to ask, when you look at numbers like this, how does it inform your way of investing? And by the way, these stalled reopenings, how would that also impact your portfolio?
To us at Kingsview, Charles, it speaks of opportunity. Now, I mean, these retailers, as you mentioned, some of the numbers are staggering. I mean, they're shoveling in the cash, let's say, because the reality is that the numbers got so bad in retail, they were just bound to get better and bound to get good. And now that we started this reopening, we've had the government come in with some really, really appropriate and exceptional stimulus, in my opinion. And so the retailers are bound to benefit as everybody gets kind of not used to this, but maybe a little bit more comfortable with this new way of living that we have. And so when we look at some of these opportunities, Charles, we look at travel stocks, we look at airline stocks, because that's where I think people, as they get pent up around here, realize that they want to go out and take trips. They want to go out and maybe book that Airbnb. And so therefore, I think that's where some money's going to be made in the next few months.
I got to tell you, they look so compelling, and they were all amongst the top 10 percentage gainers yesterday, including Expedia and Bookings. And I think you're right. I mean, if we do get over the hump in any form or fashion, they will be the outperformers for the second half of the year. Okay, so I know you guys both of you sort of focus on value and opportunities there. For those folks who want to buy tech, because buying the dip in tech has only worked for about 10 years or so. Is there anything, Keith, that you would buy in the tech area, the momentum area, that's down today?
Well, I tell you what I already have purchased today. I've gone after Apple because I like stuff that goes on sale. I'm a pretty simple guy. And Scott makes a brilliant point using the word comfortable. People are going to get comfortable about the new environment we live in. That speaks to the shovelers we're talking about, the Microsofts. I'm looking for JP Morgan. Visa in particular is down today. I haven't bought yet, but I'm looking at it very carefully because as the world goes forward, people are going to spend, and that's a great move into digital currency.
And Visa is considered a tech name, also a payments name. Real quick, I did promise to get back to banks. More specifically, Scott, I know you like JP Morgan as Citi. Are you frustrated, though, that they've had these amazing earnings reports in this sector? Morgan today, Goldman Sachs yesterday, and these stocks really aren't moving. There seems to be a mismatch between the results and Wall Street yawning.
Maybe. I kind of, you're looking at them half full, which is cool. I looked at them kind of half empty, frankly, Charles. I mean, the guidance from the banks wasn't great. A lot of the CEOs that came out, whether it's David Solomon from Goldman or Jamie Dimon, have talked about the uncertainty that lies ahead, which I think is real. I mean, that's reality, but that wasn't exactly reassuring. And the loan loss provisions were at record levels, and the fact that net interest margin still doesn't look good. So to me, the earnings were not really that great, and therefore the stock's going to get smoked. So that is actually an opportunity to at least kind of, I think, verify that the bottoms are kind of in here, and I don't think they have any place to go but up.
My man, if the stock picking stuff doesn't work for you, in Washington, D.C., anyone who could spin a thing that you just spun like that, you've got a gig waiting for you in D.C. That's all I can say. Keith,
I'll submit
Scott,
my
you're two of the
application.
best,
Thanks,
and I
buddy.
appreciate your time. Okay. Meanwhile, folks,